Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Scalping, the PCE price index. Earlier today, the PCE numbers hit the news wires. They came in as expected. We're going to unpack those. We're also going to take a look at what I would call the tech wreck of 2025. I mean, we're seeing major bearish pressure on everything from Bitcoin to the US 100. We have a level. We're right on the doorstep of our key level in the US 100, and no fear when we're trading these levels. No fear. You step up to the plate and you get what you're going to get. But right now, this is a serious dump. We talked about the odds of Bitcoin washing out and going deeper, and that's exactly what's happened. That was a touchy trade. We put it out there. We didn't quite hit our profit target, but man, we rallied $4,000 really quick, and now we've seen the sweep lower, and there's a lot going on right now. So if you're in the tech sector, if you're trading tech, God bless you. Buckle up. You're going for a ride. As far as what we're going to scalp today, we're going to look at that 5813. A lot of you guys have looked at that. That video is actually taken off pretty good since Tuesday. So we're going to scalp the 5813. We're also going to scalp the 920, and if we get a chance, we may look at the 920 with just maybe the 9 EMA with RSI, but we're going to do some real short time frames. I'm going to run through a couple of trade updates first. We're going to talk PCE. I'm always looking for action here. I think we've got a trade of 5813 setting up in gold. Gold's down big. Gold's down big today. So there's a lot going on, guys. Good to see everybody back in the room. Emmanuel, good afternoon, Shane. I've missed your teachings. Oh, that's cool. Hey, listen, we're on demand over at How to Trade. Come in, watch these things whenever you want, whenever you have time. That's what this is all about. You don't have to watch us live. You can always just tune in and watch whenever you have a chance. So I'm doing very well, Emmanuel. Dibble, good to see you. Dibble, welcome. Haven't seen you in the room for a few, but I hope you're doing well. I think that March starts tomorrow, and this has been a turbulent February. I mean, we didn't lose a trade in January, and February's had a couple, and this week has been tough. This week has been a challenge. I had a great trade that came across on NVIDIA early, but man, it was so hard to get. I almost feel bad about putting those ideas out because those are so hard to get. You almost have to see it exactly, and then you got to jump in the market immediately, and that's really tough. I mean, we're not signal providers here, but that was one that I really loved, and that's a challenge for everybody not to get those. Matt Vareem, good to see a new follower. Look forward to watching. Well, Matt, let's go ahead and get it on. Let's start out with a couple trade updates. The first thing I want to start off with is this US 100. I mean, this is absolutely huge. This US 100 trade idea that we had out yesterday. We're looking to buy this thing from about 20,375, and we're right on the doorstep. I don't fear anything in this world. That's for sure. Death and taxes, and you can't do anything about both of those. But what we had here today was just a near miss. It looks like we're still in this trade. We're looking for something really to come our way. But right now, it's just about discipline. This was just a basic Fibonacci trade. If you're brand new to the room, Fibonacci retracements are my weapon of choice. Check out How to Trade. Go in and watch the Counterpunch series. It shows you how I trade them. But right there, that monthly spike low to that spike high, the pullback zone, that's a huge level. 20,330, that's a monster zone. So we wanted to get in a little bit ahead of that. I love to shade my entries just a little bit ahead of that zone right there, and you can see what's today's low. Today's low is right around 20,407. That makes me cringe. That means we probably missed our entry by 25 points, which is nothing when you're trading the NASDAQ. It's nothing, but we're still there. We're ready. Let's take this down to a lower time frame, and I'll show you exactly what I mean. 30-minute time frame is going to be my bread and butter for the U.S. session, and as you can see, I mean, this right here, what happened Thursday, bang. There's your big-time sell-off right there. Okay, that was basically on the back of NVIDIA crashing, and then we get compression, and then you get another late-day break, a leg down. That is a textbook trend play. A lot of trend players made a lot of money on that move right there. Boom, nice move, compression, break, and then once we broke, now we're sort of trading down to what I like to see. But that right there, guys, unfortunately, I should have a lot more hair than I already do. That right there will make your hair fall out just in droves. We're right there. We are ready to buy this thing and just run to the bank, and we missed it. We didn't get it, and unfortunately, I've been doing this for a long time. That's just a cost of doing business. But right now, I like what's going on with price action. We've got a nice sort of a flat, really compressed action, and if in fact we do trade down and we're just sort of flat today, that's going to give us a real high probability of cashing in that trade. So I'm watching that US 100 play very closely. I don't want to spend that much time on it because our other trade we've got to definitely update you on, and this one is ugly. This one was ugly. Definitely, if you want to trade any of this stuff, check out switchmarkets.com. Dave, F19, good to see you, Dave. But definitely check out Switch. We've got all sorts of credit bonuses, you name it, thousands of markets, pretty much anything you need over there. If you're an international client, if you're here in the States like I am, then you're going to have to find a different vendor. Feel free to come to How to Trade. Send me a PM. I'll tell you which futures brokerages I use, and then also the Forex brokers. Our partner broker here, not a partner, but a referred broker here in the United States for Forex is Owanda. So pretty good outs there. Switch and Owanda, those two can get you up and running no matter really what you want to trade. If you want to trade futures, then you got to come talk to me. And I can help you there. All right, in any case, Bitcoin, this was our trade. We were buying Bitcoin at market from our 38% retracement. The biggest problem I have right there, and I made a mistake. I mean, our next level was 91,000. I knew better than that. I knew that if the trend was strong, we probably weren't going to trade above 90,000, and that's exactly what happened. We've come off very, very big. If you've watched any of these live streams this week, I've talked a lot about that 75 level. I think we're probably still going there, but really a hard strike off of that 50% monthly, which is right around 79.5. This low right here was right around what, 78, 197. There's a lot going on in Bitcoin, and it ain't all good. So right now we're waiting to see if these cryptos sort of find a little base. I will tell you for a fact that the big investors are officially watching the US 100, and they are officially watching Bitcoin and some other cryptos. You're going to see institutional money pour into this stuff. The question is how deep is the retracement? Always remember this. If you're a retail trader, the market will get you. The market will hunt your stops and it will get you. It's not because it's nefarious or evil or anything like that. It's just because that's the way of things. Before things get really good, they get really bad. And unfortunately, we're going to be talking a lot about that this year, especially with the change in the political scene here in the United States. But I've been expecting a downturn for quite some time. It's starting to develop. Things are going to get tough before they get better. Everybody bought Bitcoin at 100,000 saying it was going to go to 1 million. That's a major flush, guys. I mean, oh, man, if you have your house down, let's say somebody went out and they bought five Bitcoin. You know, you're middle class, you've got all your savings, and you put it in Bitcoin. God, you took a hit. You're down 20%. You took a hit on that. And now the temptation is, hey, maybe I should get out of this now. And typically that's what happens. We find a pressure point, we flush the public, and then we rally. I still love Bitcoin up to 125,000 this year. I really do, and that's almost a double in price. But, man, when you see this thing gaining 5 and 10% a day, it just doesn't take very long. The institutional adoption's there. You will see the strategic Bitcoin reserve really come to fruition probably in the next 6 months here in the United States. But right now, this is a textbook. I mean, they call it a bull trap or people's bull trap, bear trap. I don't care about any of that. The bottom line is this. We traded beneath January's low, and we flushed everybody out. All your retail longs are now, if you're a leveraged long, you're gone. If you're a cash long right now, you're feeling the pain. And that hurts. I mean, believe me, I've taken haircuts before. I took a haircut last Friday that was not fun. But I can't tell you to stay the course if you bought at 100. If you bought at 86.5 like we were talking about, you're probably going to be okay. But this thing can make another leg down, and then the next leg down, life gets real serious down there at 72. Then we start talking about just maybe going back down to the 60s or the 50s. And if you bought at 100,000 and it goes to 50, you're destroyed. You're destroyed. So I think the best buy in the world is going to be 75. It's an easy buy, 75,000. I'd be surprised if we don't trade that. But right now, hell of a bounce off of 79, and we're still sort of in a bullish territory, believe it or not, for Bitcoin. But this was a major flush, and that's exactly what happens to retail. Always remember that. Sheep get slaughtered. Don't be a sheep. If you're going to get into the market, do it on your terms. All right, we're going to have to do some scalping here, though. I've droned on long enough. No donation Friday. Remember, if you've won big this week, put 50% in your pocket. If you had a losing week, trade it as usual today. If it's a big losing week, screw it. Come back Monday. You don't need to do anything today. Why? Because things are not going well. I'd rather see you show up Monday rested and ready to roll and ready to get it on with these markets than really go into the clubhouse just destroyed. I don't want to see that out of anybody. Neutral. If you're neutral, if you're at flat, which many people are, trade as usual. Reduce your leverage or don't trade. It's your choice. You do whatever you want. Personally, I would say reduce my leverage and just hang in there and play for Monday. Week 9, this was the big thing today, was the PCE price index. And And what we have here is really just a group of numbers that we're not going to spend much time on. I mean, we got a scalp here in a second. I got one coming in gold too. So in any case, PCE price index is a big deal. The reason why it's a big deal is an inflationary metric that the Fed looks at. Joshua Chung, good day, good evening, good afternoon, good morning, wherever you may be. Bright and early here in Dillon, Montana, about 10 after 8 in the morning, so I feel pretty good. Sort of been under the weather about the last 2 weeks, but we're back in the gym this afternoon. Maybe might even be able to eat something today. Who knows? In any case, consumer prices remain high, and that's really what I want to stress here. Now, we came in line with expectations. Core PCE came in at 2.6. Forget the yearly numbers. Leave those for CNBC and all the economists. You don't need to know those. What you need to know is the monthly numbers. That's what the market's reacting to. Is inflation trending higher or coming down lower? That's what we want to know. So right here, PCE price index for monthly January, 0.3% came in as expected. I would say in line with expectations. Personal income's up a pretty good amount. That's interesting right there. We're going to talk about that more and more as this year drones on. And then personal spending's down. The personal spending's probably the biggest number out of this big list. And the reason why is we haven't seen a decrease in spending in a long time. Consumer confidence is down. Home sales are down. Consumer spending is down. What does that mean? If you don't spend money, you go into an economic contraction. And when you go into a contraction, recessions aren't far behind. So we got to watch this relatively closely. But this is interesting to me just because I'm sort of, I have a background in this stuff. PCE price index in the United States increased to 125.18 in January from 124.77. All-time high, 125.18. So we're at all-time highs with the PCE price index. Absolutely nothing has come down. Don't let anybody tell you any different. If you're watching CNBC and everybody's doing jumping jacks and they're saying, hey, yeah, inflation's under control. No, it ain't. No, it ain't. I mean, in the parlance, I hang out, lift weights with a bunch of guys that are out in the country, and they're very blunt. They say, no, it ain't. Eggs are $10 a dozen. Prices are high. So that's what we're looking at for our fundamental today. As far as what we can really say about how the media is covering this, the Fed's favorite core inflation measure hits 2.6 in January, as expected. And basically what they're saying here with the CNBC article is that, listen, we're okay. The Fed, like the report comes as the Fed weigh their next move. But in recent weeks, officials have mostly expressed hopes that inflation will continue to gravitate lower. It's nonsense. So the biggest thing that I would say about today's release is that it's in line with expectations and we don't know anything more than we knew before the release. All right, let's scalp. Gold right here. We've got an interesting look at a 5-8-13 strategy. Now, this video came out on Tuesday. A lot of you have liked it. I've got a lot of great feedback on it. Sort of a video that I promised to make for a long time. This is a triple moving average crossover strategy. I really like this one because it's simple. It's easy. Now, you can see right here, if you do get that 5, everything I do is color-coded. So red is the 5. That's our hot EMA. That's the one we're watching a crossover. That's our signal bar. The 8 EMA is going to be blue. That's our center bar. And then 13 is going to be purple. 13 is my favorite. By far, 13 is my favorite EMA. That's the one that's on my own personal charts with the Bollinger Bands and also the Fibonacci's. But right here, our rules are easy. In this situation, we're looking for the 5 to cross over the 8 and price to close, this price bar to close above all 3. Now, why does it have to close above all 3? It's because that 13 EMA has special relevance to me, but that 13 EMA is going to tell you exactly what the macro trend is doing. And when we're trading crossovers, we're looking to get in. We're looking to get in on a shift in momentum. So right now, we've got a lot going for this trade. It looks like we've got our crossover setting up here in the next minute and a half. If, in fact, we do get that bar close above the 13, then we're going long. There's no question about it. We'll be right there. We're going to buy. We're going to buy at market, right on the bar close, and then we're going to take a long there. Now, the real question is number one, will this thing set up for us? Probably not. It's probably going to take another 5 minutes, it looks like to me, but maybe. And then what we can do here is our trade's very, very simple to set up. This is a 5-minute chart. If you're going to do this 5-minute stuff with gold or with your Forex pairs, you do it right now when the active's live and the throttle's open. You're going to be looking to get this trade. Stop loss is going to be right beneath that swing low. I actually really like this trade. It's setting up beautifully. 28.40 to 28.32. That's going to be about an $8 risk. So I recommend getting at least a 1-to-1. A lot of you really love market structure. I get I get messages every single day talking about market structure. Shane, you got to talk market structure. Well, if you're interested in market structure, that's a swing high right there. And if you want to shoot for that, that, go ahead and shoot for that. I really don't mind. And also, you can just try to pick a bottom for the day and make it a day trade and try to really shoot for the top of this action that formed back, I don't know, about an hour and a half ago, somewhere in there, about 2 hours ago. You could shoot for something like that up in the 60s. It just depends on how long you want to let this trade go and what your goals are. In any case, one thing that I didn't show you in the video that I have added, RSI, and we're going to talk more RSI in a minute, but you can see RSI is in oversold territory down here. That means that we're on a buy, and we're waiting for this crossover. We're waiting for the 5 to cross the 8, and it didn't quite happen just yet. So we've still got some work to do here. We've got to get our crossover established, and price needs to close above that bar, and then that's our long. Let me see. So that's going to be one scalping strategy. Now let's see if we can actually get a trade. Now this is another one. This is going to be a 1-minute chart. Now you'll notice we dropped RSI. We dropped all of it. We're just trying to get into the market right now on this E-mini NASDAQ futures. And this is one that we do a lot of examples with. And the reason why is it's active and it gives us a lot of trades. Now this one right here, you can see you didn't get a crossover there. Where would have been your last trade? Right there. Right there would have been your crossover. Bang. Right there would have been your entry. One more time. There's your cross. The 5 crosses over everything. There's your close above those EMAs, and that's your long. So how would this trade have looked? This is a 1-minute chart, so this is fast and furious trading. We always wind up doing would have been, should have been, but realistically, we don't get many trades just on a live stream, on a 30-minute live stream. That would have been the trade, though, and it's easy. That would have been your entry right there. That would have been your stop loss. So where's your profit target at? It's up here somewhere. We're still rolling. We're still rolling higher. So if you're long from there, you're doing pretty well. Couple of ways to manage these trades. You can get out of the market when, in fact, you do get that cross under. When the 5 crosses back under the 8, you can get in there, or you can get out of the market there, or you can just have a static, 1 to 1, 1 to 2, 1 to 3, 1 to 4, or you could be looking maybe for some market structure. And remember, this is a 1-minute chart. I wouldn't fall in love with market structure on a 1 minute. I really wouldn't. A lot of traders do, though. I think you run into trouble doing that. So right here, you can see we've got a trade setting up. And essentially what we're looking to do is we're looking for a sell right here. And we may get it. We got a 1-minute chart right here. What we've got to be certain of is we've got to be certain that we get that crossover. Okay, or once we get that crossover, the 5's got to cross the 8, under the 8, and then you've got to get a close down here. And then what are we going to do? We're going to look to sell the market. We're going to go ahead and rock 4. Okay, we haven't quite got it just yet, but we're getting ready to. 1 more minute probably. Okay, it looks like we got an opportunity here maybe to get this trade here. T-minus 50 seconds. Let's see what happens. Your keys are easy. We've got rid of the RSI. If we wanted to add RSI, I mean, I certainly can. Our charts. Yeah, there you go. Are we in overbought territory? Nope. We're just going to take this thing naked. Why? Because I want to execute a trade and show you guys how exactly we trade this. And we also want to make a little bit of money. Remember, the action on a 1-minute chart is not indicative of what's going on in the broader market. Those other trades I showed you with US 100, with some of these other, Bitcoin, that's a macro view of the market. This is a micro view. If you're going to trade a 1-minute chart or a 30-second chart or a 15-second chart, you need to be technical. The only thing you really need to know is if there's a news item out. And if there's not a news item out, you trade your technicals and you do the best you can to make a little bit of money. All right here, this is exactly why you have a strategy. The market reversed. We didn't get our crossover, so we're not short just yet. So we need to see a move. You need to see a decisive move right now in the next several minutes so we can get that cross under and potentially get our trade. Let's go back on over to our gold trade, and you can see it's beginning to develop. It's just going to take some time. This is a 5-minute chart. We're going to be taking a little bit more time to develop this trade, but we've got to see a crossover. If we do gap up here in the next minute and a half, somewhere up in there, then we will have a trade. But right now, we don't have a trade. It's not there. Price is trading right around that. One last thing I'm going to say about this is you can see the importance of that 13 EMA. That's the only one on my charts is a 13, but right there, you'll notice that thing has been topside resistance the entire way, and we're fighting with it again. That's why you've got to wait for price to close above the 13 EMA on this trade. If it does do that, you've got an opportunity to get long and maybe make a little bit of money here. So I would love to see this set up so we could send them, potentially make a little bit of money, but doesn't look like we're going to get it just yet. We got another minute at least, but that's not going to work for us, at least not this 5-minute bar. In queue, we're still waiting. We just sort of got a little bit of a stutter step here. You'll notice that 13 EMA right there on the 1 minute is holding very, very firm, and that's absolutely huge when we're talking about getting in on a move. You've got to wait for that thing to be taken out. If it's not taken out, the market's going to blow up in your face. That's probably that's more important than the crossover. The 5 crosses under the 8, we're selling. but it's got to close. It's got to be beneath that 13 EMA. Look at the 13 EMA. We might have been able just to scalp the 13 EMA. As a matter of fact, that's what I do, but I do it on longer time frames. All right, here we go. Now it looks like it could be game on here. Now the real question is what are we going to do as far as a close? Okay, negative close. We've got our sell. We're going to sell the market right on this bar's close if we get the crossover, and we've got to make sure that we get our crossover. Very important. If we close beneath that bar, okay, there's your move. Did we get a crossover? Did the 5 cross the 8? There's your crossover. Sell it. Okay, we're officially short this market. Bang, we're short. What are we looking at? We're looking for a stop loss. Where's our stop loss? Right there. I'm going to put it right above that swing high. Where's our profit target? If our stop loss is at 2065 and we just sold at, let's see, 2038 or 20,638, then I've got to get at least 27. So we're looking somewhere maybe down in this 11 range, somewhere right in there. That's a basic 1-to-1. Not a bad trade. Not a bad trade on a 1-minute chart. I mean, remember, if you're a 1-minute trader, you are going to be doing this all day long. You're going to be trading all day long, and I highly recommend keeping it during those real active periods like we're seeing right now. So right now, price is reversing against us, pretty standard, really. 1-minute chart. We need to get some heat now. We need to get some action. Let's see exactly what we can get here. If we can get a break, we're looking for that bearish break. We're in position. You can't argue with what we've done here. We are in position to get a little bit of this bearish action, but we've got to see that definitive move down to 20,611. That's just a basic 1-to-1. If you want to ride the lightning and let this thing develop, maybe you could shoot for something down in this order block right here. But once again, I mean, we're 1-minute charts. I'm not necessarily, I'm not a big believer in 1-minute charts. Doesn't get any more volatile. Now price is blowing up against us. Well, I got to say this for sure, not real money. These are demo dollars. We're rocking a 4 lot, and you can see just how big the swings are. We're up 500. We're down 1,000. We're down 800. If this thing breaks against us, we just got to pull the Band-Aid off and get out. Right now, you can see we're starting to cross back up over. Trade's not looking good, but we've got a firm stop out point, which means that we won't lose the ranch. Remember, I would recommend probably between 1% and 5% of your trading account on any trade. If you're trading a 1-minute strategy like this, don't go any higher than 3% because you're going to take trades all day long. You're going to take trades all day long. So right here, we're still looking for our runner. We're on life support in my view. I think that we could easily get stopped out any second now, but we're still in it. Now, our moving averages are flattening out. That typically is the kiss of death for a crossover strategy. We were looking to get that move and get into that nice bearish action. And right now, the market's sort of loading up right around 20,650. It's loading up, and it's not really giving us the follow through that we want. Right now, the stop loss is going to be your best friend, and I'm watching the flat button very closely. As soon as we get up and take we want to shade this just a little bit right above that swing high, but right there, I mean, as soon as we hit our line, okay, we're out. Very, very close to being out. We're not out just yet, but we're on life support. So you can see right here, we're going to get nailed. We're going to get nailed right there. Okay, should we reverse our position? Should we reverse it? We're not quite stopped out yet. That right there is why you don't put it one tick above a swing high. Now we're coming back down. Do we have a chance to get the reversal, or are we going to blow higher? I think we're going to blow higher. It looks to me like you're going to get that crossover. Right now, you're going to get that 5 to cross back up over the 8, and I'm almost ready just to reverse the position. All right, reverse it. Let's see what happens. Okay, now you're long. You've got the cross back over, and you can see what you have now. We're just trying to get a move. Swing low there. Are we going to make a new high? Are we going to blow high? Maybe something like that. Tough to say. That's 1-minute crossovers with a 5-8-13. You want to live like that? God, I don't. But realistically, your success is going to depend on your risk versus rewards and how long you stay in. You can see right there, we're on the right side of this one for right this second. Short-term trading, we just got hit. We need to get a move, a bullish move, or else we're going to get chopped out of this thing. A great example of how tough this trading can be. Right around break even, we're still waiting for that big move. Do we get a big bullish move? I'm not really expecting one. I think we could easily flatten out here. But hey, man, maybe we get it. Maybe we get the move. Let me see. Matt Vareem, fast and furious. Absolutely, Emmanuel. Let me see. Matt Vareem, I see so many traders using futures instead of options on SPY or QQQ. Can you explain why you prefer futures instead of options on the index? Yeah, I like futures, Matt, because they give me leverage. They give me leverage, and they give me the spreads you can see right there. There's no spread really to speak of. Okay, there's our move. Sorry, Matt. I'll get back to your question here in a second. There's our move. So what should we be shooting for here? I mean, it really is all random. So we risked, 20. We bought 75s, which is a big risk. It's 55. What is that? 55 points, something like that. We should be looking probably for 21 and a quarter, something like that. If you wanted to leave this way up there, we could leave it. But you could see right now, do we want to cut our trade off? Are we in it? We're not quite in it for a 1-to-1. Let's go ahead and go. Let's go 20. Let's go 75, 20. So 50, you're going to have to be up here right around. Let's just go ahead and shoot for 30-ish. Just eyeballing that right off the cusp. So your success as a trader with the 5-8-13 is going to depend on getting in on moves. You're going to have to get in on moves. So right there, we were wrong. We cut our trade off. We got in on the reversal, which was going to be our next signal. And now we look to be in decent shape. The real question is can we stay in this and get the big runner and really get the big profit on this trade, or are we going to give back some of what we made? It looks to me like we're going to gap up and go ahead and touch 30. So right there, let's see. As soon as I hate waiting for these things, but if we do hit 30, then we'll get out with a big profit. Right now, what do you want to do after a loss, though? For me, I would already rack my profits. I'm not interested. But your success trading crossovers is going to depend on how long you can sit on these winners. You've got to get the big runners. If you don't get the big runners on this, then you're going to be in big trouble. So right here, I'm still watching. We've got good upward trajectory. There's our price action, and I'm not going to dawdle with this anymore. Let's go ahead and get out of this trade. Okay, so we just closed our position. Now, what did we make? Okay, what do we make? What's our history? All right, we got filled there, orders, account history. What did we get? Right there. Now, ignore the leverage. Ignore everything that I did. We used four lots right there. And if you were trading 4 lots on an NQ with this strategy, you better have deep pockets, and I mean deep ones. But right there, we took a loss. What do? We took a loss right there at 29.60. We lost 29.60, something like that. We made 4,100, so our net's about 1,200. That's scalping. You guys want to live like that? Now, one of the things you can do to cut that leverage way down is use a micro lot, and it goes back to Matt's question. I've seen so many traders using futures and options instead of options on SPY or QQQ. Can you explain why you prefer futures instead of options on the index? Okay, Matt, I understand why most traders would use, or a lot of traders would like to use options. And they would use options so they can really just pay the premium and limit their downside risk and just try to hit those real short expiry options and make the big money. I understand that. Unfortunately, the winning percentage on a lot of those strategies is relatively low. For me personally, I like futures because, yes, your cash outlay is bigger. We're taking bigger risks right here. But we know that the markets are liquid, especially something like an NQ or an ES, an E-mini S&P 500. Extremely liquid markets. We know in crude oil liquid, gold liquid, and what that means is we've got a real tight spread there. We're not going to be paying a tremendous amount as far as slippage goes. We can manage our slippage as well by just trading during the right times of day. So for me, I'm not really an expert on options pricing. The way that they price the premiums, I'm willing to say that they're smarter than me and they're better than me. The folks that price options. And that being said, I just like to get in on the flow and the move of price action. And the futures contracts really let me do that. So that's why I prefer, I hope that answers your question, Matt. It's a personal preference. I've always traded futures. I've very little experience with options, but what I have tried to do in options hasn't really worked out. And I feel like I'm always outside looking in on those premiums. Let me see, Emmanuel. I'm interested in scalping gold with you. Please check out. Yeah, let's go ahead and see gold. This is your gold right here. This is it. This would be our trade. Slow. 5-minute chart, slow. Spot gold, slow. Now, we're there. We're there for a trade. We've got to get a close. If we get a bullish close right up above this 13 EMA, then we're sending them. Then we send them. We look right here. You've got that RSI. I talked about that earlier. You were in oversold territory. That swing low to me potentially could be the bottom of the day. Okay, there's our break. Now you're looking at one, but we got about a minute 15. We got about a minute 15 right here, and this will be our trade. This looks, there's your crossover developing. Remember, you've got to wait for the bar close. You can't do it right now because if you do buy it and that market reverses, then your crossover will be off, and also your price will not close above our 13. But I will tell you this close above our 13, we got faked out right there as well. Bang, bang, got stopped there on the downward trajectory, but we haven't been able to crack that 13 all day long. Let's see if we can get a shot at it right here. Now, the real question is, and I made a video on this using Fibonacci retracements to improve your entry on that 9 EMA strategy. You could do something similar here if you wanted to wait for the close of this bar and just go long, which is what we're going to do. Or you could wait for a pullback down into this, what I call garbage, where all of our moving averages and sort of this order block is going to be. We could wait to try to improve our entry point, but we could definitely just be looking to go long here. I mean, it's going to develop for us, so let's go ahead. We're lined up. Remember, demo dollars. Believe me, I've traded real money for you guys in the past. Sort of got frowned upon a little bit for doing that, but these are demo dollars. But the leverage, definitely something you could do if you have a prop account. All right, we're waiting right here. 4, 3, 2, 1. What do we got right there? Okay, there's our crossover. There's your crossover. You're above all three. Buy it. Are we long? Did we get there? Did we get filled? All right, we're officially filled. So we're long right here. You'll notice that our entry point, not too bad, a little bit better really than that bar close. So our entry is going to be right here. So the real question is what does my trade look like? Well, my trade is relatively straightforward. My stop loss is beneath that swing low. Remember, we pad those a little bit. I don't want anybody sitting around just one pip, one micro pip below that. That's your stop loss. So the question becomes, what do I need to get out of this trade? Honestly, with a 5-minute chart, this is probably a day trade. You'll have another 3 hours of pretty good gold trading. What do we think is going to happen to this trade? Tough to say. Tough to say. I can tell you on a Friday, I would much rather be long gold than short. You're down 1.25%. We're fighting the trend. What we just tried to do with our strategy is pick the bottom of this thing. We did. So the question becomes right now, are we in decent shape? Well, what do I want to get out of it? Right there, we bought 28.42s, and you got 28.32 down there is our risk roughly. So we got to be looking for about 52s here. At least a 1-to-1. If you're a trend trader, then you're just trying to pick your bottom. You believe that you've picked the bottom here using the 5. Our indicators say that we may have picked the bottom here. This one probably rolls the rest of the day. So far, so good. I can tell you that. If, in fact, you got it up there at 28.62, that's going to be about a 1-to-2 risk versus reward. And remember, your success using crossover strategies is all about your ability to stay in there and get your profit targets. And honestly, you're at the mercy of the market. You're either going to catch your moves or you're not. Right now, I mean, I'm showing you how you can put higher leverage trades on and make a lot of money doing this. But just remember, I mean, the risk is significant. The risk is significant. But right now, we're up about 2 Gs on a position that's not that huge, really. But we print 28, 44, 43. I mean, the price has done absolutely nothing yet. If you're shooting for a 1-to-2 or a market structure trade, you got a long way to go, brother. You got a long way to go. Absolutely, Matt. My pleasure. Hello, everyone. Good to see you mobile. All right, guys. Well, we did a little bit of high-impact scalping here, and that was a lot of fun. It's always fun when you do all right. We took a loss right there. Right now we're up about 2,100 there, but we took a loss. Come on. Account history. We got hit, though. First trade we put on that NQ 1-minute chart, we got hit by about $3,000. And remember, these are demo dollars. Don't get carried away with the numbers. But we lost one, we won one. What's the difference between the loss and the win? I made $1,200 more bucks on my win. If you're going to trade crossovers, you need to make more money than you lose. No, really, your losers have to be bigger than your winners. If you're a tick scalper, not necessarily, and I'll talk about tick scalping some other time, but definitely. You made my day already, Shane. If you made money, Emmanuel, good for you. If you already took it, but that trade right there, if you were scalping that, that was a pretty hot little move right there out of gold. Not bad. I love the 5.813. I think it's a pretty good one. All right, guys, I'm going to go ahead and sign off. I've droned on long enough. We didn't even get to our 920 EMA crossovers. I was going to look at this dollar CAD, maybe give you a bit of a day trading approach, and also this dollar yen. This was one right there that you could have traded if you weren't using RSI as a confirmation device, and you'd have been riding it up pretty good. So what's happening right now to our markets? What's happening? The U.S. dollar is giving back some of its puff. You're seeing the sort of the bullish side of our markets come out, and unfortunately, it looks like our U.S. 100 trade idea, we missed that entry, and that is frustrating. Right now, we're at 20,697. You'd have to beep out my language right now because we missed that entry point by 25. That entry by 25 points, and that's tough. That was a banger. That was a winner. One last thing I want to check real quick. NVIDIA. Intraday scalping. Look at opening bell. No, that's not opening bell. Ding, ding. That's the daily close. I sort of went off on a tangent about that yesterday. There's your close yesterday. You opened even lower today, but the buyback's on now. The buyback's on. Look at what you got right there. Oversold territory on the open. The entire world knew it. Nobody's selling NVIDIA right now for the long term. This dip right here is a pretty good dip to buy for the Q1 2025. I mean, it's obvious. Remember, this is how markets work, guys. They wipe retail out, and then they rally. So right there, that was a great buy. There's your crossover, your 9. Your 9 crosses over your 20, and now you're in the promised land. So there you have it. All right, everybody, I'm going to go ahead and Emmanuel closed his gold position and took a little bit of money out. Well, have a good weekend, Emmanuel. Can't beat that. All right, guys, I'm going to sign off here for a while. Hope this was a decent stream for you. Be sure to check the schedule out here in the trading room for the streams. Our stream schedule is going to be changing a little bit. We've got a lot going on here over at How to Trade, and we've got some different things that we're going to have to tend to. So my stream schedule is going to probably be a little less consistent. We'll still stream every day, but as far as what time we're going to stream, couldn't really tell you, but it'll either be this time slot here or it'll be at my normal U.S. mid-session brief time. So if in fact you're interested in watching some of the live streams and you don't know when I'm going to be on, go to How to Trade, get in the trading room, sign up, get in the trading room, click on the past streams, and you'll see all these streams are archived. You can go back and watch some streams from 3 or 4 years ago if you want. All right, everybody, I'm out for today. Big time news cycle. The Epstein thing yesterday was an absolute flop. We're going to see. We're supposed to get more information today. The big thing today, though, is Russia-Ukraine. Zelensky's in Washington, D.C., and he's supposed to sign a mineral deal with Trump. We don't necessarily know exactly the timing of that. It might have already happened, or maybe it's getting ready to happen, but that's a big deal. A lot of people believe that's going to be the first step to a peace in that region. So, all right, guys, Dibble, good to see you. Welcome back. Cheers. Have a great weekend. You guys have a fantastic weekend. You guys have some fun. Get away from your computers and go have some fun. It's important. You got to have fun every now and then. We'll see you back here Monday. Trade the action well, and we'll talk soon. See you.